This is the briefing for Friday, December 1st. As I've been discussing this past week in the weekday briefings, the indices are at a major inflection point. This is just really a very important resistance area. I've deleted some of the shorter term trend lines showing support or resistance to get a better picture of what's happening. This is the spiders on a daily basis, and you can see the rotational pattern that they've been in. This goes all the way back to April of this year. So basically, we bounced off the low basically on August or October 27th at 410, and then we had this gap here and this move up, this gap here, and this whole rally was suspect. Mainly because you can see what was happening with volume. Volume was falling off. Now, right in this area here is where we had the Thanksgiving holiday. And that week, typically, we have very low volume, which is exactly what happened. I think this was last Friday's low in terms of volume. Now, the important thing that's happening here, you can see the pause that we've had here on a daily basis right below this 459, 460 area that is the upper extreme of this area of rotation. So keeping in mind a picture of where we are in terms of this longer term chart, and then we'll kind of zero in on the shorter term charts in just a minute. But you can see that volume is increasing in the spiders, breadth is increasing in the S&P 500. It's about 75% of the stocks were trading higher in today's trading in the S&P 500 as opposed to lower. And you can see 52-week highs on the NYSE minus 52-week lows is beginning to expand as well. So basically, the index, this index anyway, is at a very important key reference area, and it appears that it is strengthening as it approaches that resistance area, which suggests the higher probability of a breakout above this 459, 460 area. Now, the Qs or the NASDAQ a little bit different. You can see its rotational area was right around and just above this 380, 390 area. And you can see that today we traded just above it and closed just above that as well. A little bit different in its rotational pattern, but you can see this rotational pattern through here. We had a false breakout, and then of course this rally that occurred going into the Thanksgiving holiday. Volume falling off going into that weekly holiday. But you can see that we had a little bit of strengthening in terms of volume, except for today. Today, volume in the Qs was down slightly, and the Qs are basically lagging the other indices, at least at this point in time in the short term. You can see that NASDAQ breadth expanded very nicely, 2,300 shares positive. So volume is certainly beginning to confirm the potential for a major breakout move in the indices. Now, in terms of the longer term development, the Russell is really lagging the other indices, and it's pretty clear. You can see this move down that the Russell made, and then of course now we've got this rally occurring, and the Russell led the rally in today's trading. Volume expanding very nicely, Russell breadth expanding very nicely. This was a very nice day in terms of a breakout move. You can see the rotational pattern just below 180. We opened below 180 and then of course drove right through it in today's trading, followed by really good breadth and really good volume. So while longer term, the Russell has some catching up to do to test this upper extreme where the spiders and the Qs are, it certainly was the leader in today's trading in the short term. Now, going back to the a little bit shorter term, you can see this is the spiders once again on an hourly basis. Now, this was like a 4 or 5 day rotational area that we've been looking at, and looking at the possibility that we were having a breakout here, but then we had a selling tail that came in, and this rotation back down to test the lower extreme. And then, of course, beginning yesterday and following through in today's trading, we had this rotation back up again and a breakout move that brings us right back up to this longer term key reference area, which is very important. Now, for trade purposes, breaking out above 460 in the spiders is going to be very important. But also, if we look at the shorter term, the hourly chart, trading back through 456 is going to be a really important support level. So if this breakout is going to happen, it should happen next week, and we should not see the spiders back below 456. Now, short term, this is hourly chart for the Qs, and you can see a little bit different here. Qs are just basically in the middle of this range of this rotational period. So NASDAQ is lagging somewhat on a shorter term perspective. And of course, the Russell was certainly explosive in today's trading, and certainly drove through this 180 area and just kept on trading, closing at the high of the day, suggesting that it will want to go higher in Monday's trading. In terms of overbought and oversold, let me go back one thing. I want to make it clear. Looking at this in two different time frames. The longer term time frame, which I've just reviewed all of the resistance areas and the importance of a potential for a breakout on the daily charts. This shorter term chart, typically I'll use a 15-minute chart, but in order to get a clearer picture of what's happening shorter term, I've changed this to an hourly chart, and you can see that rotational area there. So breaking out in one time frame could lead to the breakout in a much greater degree time frame, and that potentially is going to be a bigger move, because the longer the time frame, the bigger the money that controls that time frame. So watch what happens very carefully. Now, it's going to be very important. This is about 456.50 short-term support. I'm going to call it short-term support in the spiders. It's very important that if this breakout is going to occur next week, that we not see price back below the 456.50 area. Same thing, 385 in the Qs. Do not want to see the Qs below 385. And then, of course, the Russell, we're looking at this 180 area. The Russell looks like it is not going to look back at 180, but it is lagging in the longer term, as I showed just a minute ago. Now, we did reach a point of being overbought in both the NYSE and in the NASDAQ, but not at an extreme. So this does suggest that while we are approaching overbought territory, that the market can go higher in Monday's trading. So it's not at an extreme overbought condition. So it certainly would suggest that there is room for the market to move higher as well. Looking at total volume, you can see yesterday's volume was really very interesting. We got this really big spike in volume right at the close, and then of course today it fell off slightly back into the mid-range, I would call it, for NYSE volume. Same thing occurred in the NASDAQ. NASDAQ volume falling off slightly in today's trading, but volume certainly in the ETFs themselves certainly is suggesting that there's room for this market to continue moving higher. And now, really, the most impressive thing that I've seen so far is the fact that this is the percentage of stocks above the 50-day moving average and their 200-day moving average. And look how it has expanded. 84.86% of the stocks on the S&P 500 are above their 50-day moving average, and 62% are above their 200-day moving average. And you can see this is the spiders here, and you can see this move is just being driven by a multitude of stocks within the indices themselves. The same thing with the NASDAQ, 62% above the 50-day moving average, 46% above the 200-day moving average. So you can see that this price move, is certainly being supported by many of the stocks within the indices themselves. And the Russell is basically the same thing, 73.56% above the 50-day moving average and about 46.89% above the 200-day moving average. So as you can see, this is clearly going back, and I'll use the spiders as an example because it's much clearer rotational pattern, that we may be in for a substantial breakout in terms of the stock indices themselves as a result of where they are in this trading. Now, certainly, the market spends most of its time in rotation, and you can see that. So going all the way back to April of this year, we've been in a rotational pattern. So we could see a rotation back down, but I have to use a non really mathematical formula for probability assessment in this, and typically I assign a probability assessment to one event occurring over another, just for my own psychological trading purposes. And basically, I feel from what the market is showing us, at least in the past week, that the market is strengthening from an internal perspective, and that the higher probability is we're going to see some type of move back or breakout move in the indices potentially next week. But keep in mind, there is a lower probability that the market could rotate back through the range once again. So just keep an eye on what happens. Use the shorter term charts as I've discussed. So we want to see a breakout above 460 in the spiders, but then again, from a shorter term perspective, we don't want to see it back below 456.50. And the same thing would hold true for the other indices as well. So if the breakout's going to happen, we don't want to see it back in this range again for either of the three indices. And we certainly want to see the internals continue to strengthen to support the move if that is going to occur. If we're going to see some type of rotation back through the range, then we'll see rotation, we'll see the indices back into these rotational areas, potentially the first of the week. Have a great weekend, and I'll pick this back up again on Monday for subscribers.